If you think the start of 2026 is bad for crypto, congratulations. You've fallen for the same trap that wipes out weak hands every cycle. Prices are choppy, headlines are loud, fear is fashionable. Meanwhile, real money is positioning. This is not a bull market cheerleading post. This is a grown adult market reality check. Let's clean up the noise. Markets aren't crashing, they're shaking you out. US stocks start 2026 down. Crypto gives back 2025 gains. Bitcoin dips below $90,000 on war headlines. Backstory: the United States had seized oil tankers off the coast of Venezuela as part of its sanctions and pressure campaign against the Venezuelan government. Just in, the US strikes Venezuela and says leader Maduro has been captured and flown out of the country. And while this was happening, the Fed quietly injects another $19 billion into the banking system. Banks and the oil industry are deeply connected. Retail logic: the market is dying. Institutional logic: perfect. Liquidity is back. Every cycle starts the same way. Price goes sideways or down. Media turns apocalyptic. Retail capitulates. Liquidity enters silently. The Fed doesn't announce bull markets. It leaks liquidity, then lets assets front-run reality. If you need bullish headlines to buy, you are exit liquidity. Bitcoin: boring on purpose, powerful by design. Strategy buys $109 million in BTC after a pause. BlackRock clients add $280 million in BTC. Tether drops $779 million on Bitcoin during weakness. While you're staring at 15-minute charts, treasuries are stacking conviction. Bitcoin isn't trying to excite you anymore. It's trying to replace trust. Geopolitical chaos doesn't kill Bitcoin, it validates it. Institutions don't buy euphoria. They buy boredom. Ethereum and Solana. Builders don't cry about price. Tom Lee calls for an Ethereum 2026 supercycle. Vitalik outlines the two non-negotiables: scale plus decentralization. Ethereum and Solana quietly rebuild DeFi. Solana's RWA ecosystem hits $873 million all-time high. This cycle isn't about farm yields or cartoon tokens, it's about financial plumbing. Ethereum settles value, Solana optimizes experience. They're not rivals, they're infrastructure layers. If developers are calm during drawdowns, you should be too. XRP and stablecoins. The system didn't lose, it adapted. Ripple locks in Japanese banking partnerships. XRP becomes the most traded token on major exchanges. UAE recognizes Ripple's RLUSD as accepted fiat. Japan prepares a flat 20% crypto tax for 2026. Crypto didn't overthrow banks. It integrated with them. Stablecoins are no longer crypto experiments. They are monetary policy tools wearing blockchain clothes. The future isn't anti-bank, it's bank-compatible crypto. De-dollarization is real, just not how Twitter thinks. BRICS pushes de-dollarization. Plans remain fragmented. Re-dollarization accelerates in parallel. The dollar isn't dying, it's being hedged. What's forming is a hybrid system: dollar dominance, regional currencies, neutral settlement rails, Bitcoin plus stablecoins. Bitcoin wins from competition, not collapse. AI and chips. The real arms race nobody can stop. Nvidia ramps AI chip production. China demands millions of restricted chips. 160 million in Nvidia hardware allegedly smuggled. Eric Schmidt pivots into AI data centers via energy assets. AI isn't slowing. It's being nationally controlled. Compute is the new oil. Energy is the new leverage. If demand needs smuggling, you're early, not late. Humanoid robots are leaving the demo stage. Musk predicts humanoids everywhere. China likely scales first, of course. UBTech begins mass industrial delivery. Robots aren't sci-fi. They're labor replacement and also playing tennis. Whoever deploys them first wins productivity for decades. Automation beats ideology every time. Regulation, ETFs and IPOs. The quiet money pipeline. US crypto regulation turns constructive. Multiple key 2026 dates ahead. Senate Banking Committee announced that it will hold a discussion on the Clarity Act on January 15, 2026. The Genius Act implementation still faces some delays. The Securities and Exchange Commission plans an innovation exemption so that crypto startups could test new products with lighter regulations sometime in January 2026. Jerome Powell's term expires in May 2026. President Trump is expected to nominate a new Fed chair who shares his views on the economy. In August 2026, U.S. lawmakers are expected to advance a comprehensive crypto tax bill aimed at simplifying reporting and aligning new exchange rules with IRS requirements. 6 major crypto IPOs coming: Kraken, Consensus, BitGo, Animoca Brands, Ledger, and BitHum. These companies are expected to focus on infrastructure, compliance, and security. Grayscale and Bitwise file new crypto ETFs. Institutions don't regulate dying industries. They regulate cash machines. Know that regulation arrives before retail confidence, always. Hacks, drains, and Darwinism. Hundreds of wallets drained across EVM chains. Meme coins vaporized overnight. Speculation didn't disappear. It got culled. Infrastructure survives. Hype gets harvested. Power shifts don't ask for permission. Trump expands his crypto empire. Investors eat volatility. Buffett steps down. An era closes. Old money rotates out. New systems rotate in. That's not politics. That's history. Final reality check. 2026 is a positioning year. If you're waiting for clarity, you'll buy the top. By the time the narrative feels safe, positions are built. Liquidity has moved. Risk has already transferred. Bull markets don't start with confidence, they start with disbelief. Final truth: smart money doesn't wait to feel good. It waits for you to feel scared. Continue to dollar cost average into investments you feel comfortable in. The fiat system is collapsing. The future of money has always been digital. This market isn't broken. Your expectations are. Do your own research. Don't invest with FOMO. Position yourself wisely. Peace.